Hi, everyone. I get a lot of people asking me about the market, my perspectives, all the rest of it. So I just thought I'd do a quick run through. This is the Dow. That's the 30 stocks of the major US index, which is the Dow Jones Industrial Average. And these are the names through them. I'm going to run through it. Dow Inc. is Dow Chemicals. I might skip that one, actually, for a variety of reasons. Boeing. Let's start off with Boeing. Would you buy Boeing? Obviously, airlines under trouble. This is where it looks like historically you can see where the levels we've got to. Yep, it's dropped off a cliff, but it's at what, 2017 levels? The way I analyze these things is, I might start getting interested if it drops a bit lower from where it is. The problem I've got is on a value growth rating. My algorithm show me that turnover year on year is not going up, and it's falling sharply, as we can see in any event. So my problem with it is I might start getting interested, even more interested actually, if it goes a lot lower. And given it's at about 153, I'd want it to go to 100. So it's at $153. I need it to get down to about 100. That's a significant drop from where it already is. So that's where I am on that one and what my thinking is. Let's go through some more, shall we? Exxon Mobil, oil prices have completely collapsed. Now, here's one which I might be more interested in. Why? Well, because it's at levels it's not seen since, before 2004. I think that's been an overreaction. I know the Saudis are going to pump shed loads of oil and drag the price low, but I think this is just absolutely crazy. So Exxon Mobil, after I do this video, I'm going to buy some. I've bought some Shell, but I'm going to buy some of this because I think this could in 1, 2, God, I don't know, 3 years even. Maybe it goes back up to there. Well, I'll make 100% return. I'll double my money over that time frame. It's a long time to wait, but heck, who else is giving me double your money sessions on that kind of thing? So that's Exxon Mobil for me. What about Walt Disney closing down their parks today? How does that look for us? Well, yeah, it's at about what are we? At the $91 range. When did we first hit that? In 2015. So it's at a relatively, it's at a base. I'm not saying it couldn't go lower given the existing state of the markets. Who knows? It could even drop down to 60. But given where it is, you can see the analysis. It's at roughly 90. Can I see it going up back to its highs? Well, that would give me a 50% return. Yeah, I'm getting a little bit interested on my value growth rating, which is based on the valuation of the company and revenue growth. It's at a 5. So should I or shouldn't I get into Disney? I think I might wait on that one. Exxon, I won't wait on. Disney, I will. Caterpillar, global construction is going to slow down if there's going to be a recession. Where are we on Caterpillar? Well, it's at levels we last saw we first saw around these periods. Actually, really, when we saw them was in 2011, and it's gone sideways for a hell of a long time. My fear is it could continue going sideways for a heck of a long time, as it did between 2011 to 2015. Yeah, different management then, different group of people there. What's the problem with it? It's got a value growth rating of 3, so I'm not so sure about the valuation. The growth is negative. Valuation's fine. Growth is negative. Technicals, everything else. I'm not convinced. I am not convinced that's when we're going to see a sharp rebound in that one for now. JPMorgan Chase. Now, I know on a price to book ratio, this is rather attractive. I know valuation is good. Growth is good. Technicals are low, but banks are going to make money. I think they're going to make a lot of money. So JPMorgan Chase, I wish it had fallen further. Obviously, others have realized what I've realized, that there's opportunities here. So that's at $86 roughly, something which it had touched in 2017, has been as high as 142. That would give me about a 66% return if it reached those highs again in a couple of years. That's 33% per annum. 30% per annum return, not too bad. Could it fall further? Of course it could. I'm not in the business of trying to catching falling knives. I can easily see it going down there. So what I might do is buy a little bit now and then the second half of the little bit a little bit later if it falls. If it doesn't fall, fine, it didn't fall. So that's where we are with JPMorgan Chase. Chevron, similar story to Exxon, I guess. I could always put a half in Chevron, a half in Exxon, just half my bet, split my bets, as it were. So instead of putting, for argument's sake, 10K into one oil company, I put 5K into two. Again, given that it's at 2007 levels, given that it can go up as high as $129 and it's currently trading at 76, we are looking at a 30-40% return if it keeps going up, 30 to 50% return depending on how quickly it returns up there. Goldman Sachs, the big boys of banking. Well, look at that. 2006 levels. These guys are supposed to know what to do and how to create value. They can't create it in their own banks. It is currently at about $150. It has been as high as $250. So I am seeing need a $100 rise on that, 66% return if it rises. Would I put a 66% return rise possibility on the mighty Goldman's getting back up there? Or would I see it going lower? I don't mind putting something into Goldman's. So I might do that. That's a big bet on banking. But yeah, I think one way or another, they're going to come out all right. Amex, global spending is going to slow down, isn't it? It is indeed. And whilst we're at 2014 levels, we're certainly not as low as we could be. I think it's a bit too early to get into American Express. I would probably wait until it drops down to there. I think it could take a while before we start maybe going crazy on our Amex cards. Ooh, I say that, but I am getting tempted by the fact that if the government keeps pumping shed loads of money into everything, we might spend a bit sooner. The downside with spending a bit sooner is, well, if unemployment spikes up because a lot of companies go bust, which is highly likely, then who the hell's going to be spending anyway? So, Amex, I'm not sure about that one. I'm not sure at all at the moment. United Technologies, don't know too much about it. It's got a 5 rating, which isn't too bad. Might not be too bad, actually. It's at $100, and that would give me a 50% return if it went back up to its peaks. Like I say, it could drop a bit. Yeah, I can see that returning. My God, am I going to go through all of these? Probably not. What I'm going to do now is, rather than just go on and on and on, I might make this version 1 or part 1, and then we'll go through some of the other stocks in parts 2 and 3. So that's part 1 for now. I think I'm going to put some money into Exxon and Chevron and Goldman Sachs for now. I'll get back to you in a second with parts 2 and 3.